So around 90% of traders fail prop firm challenges. And I know this because I've coached hundreds of them and helped them avoid these next mistakes. So in this video, I want to go over 3 major mistakes that people make, and that's why they fail the prop firm challenge. Let's get into it. So the first mistake is overtrading. You're taking multiple trades a day. You're taking 3 to 5 to 6 trades a day. And for some people this can work, right? It could be a strategy that this works, and it could be that it performs really well for you, but for the majority of people it doesn't work at all. What you want to do is you want to lower your volume of trades and you want to up your risk. Something that we come to in a second. You basically want to make sure that you are starting to act like a sniper instead of a machine gun, right? Something that I talked about quite often on this channel is you want to be a sniper taking one shot, one kill, and not a machine gun just shooting away, trying to hit some bullets. Same thing as with trading. Make sure that your shots count, right? Make sure that you're taking high quality setups. And if you're just taking 1 or 2 a day, this is the perfect volume to start passing your challenges. Then we're going on to the second mistake. This is ignoring proper risk management. And with prop firms, you have 2 types of risk management. The first one is risk management for your trades, the trades that you're taking. And the second one is risk management for your prop firm challenges. So the second one is something that is not often talked about. They always talk about, okay, you have to have proper risk management on your trades, taking 1%, 0.5% sometimes, whatever it is. But there is a second part to it, and this prop firm challenge risk. Now, let's just talk about the prop firm challenge risk first so that we then can go to the trades. Prop firm challenge risk is basically how much money you put in to get a prop firm challenge. Usually people start with $500, they take one challenge, 100k, and they go ahead. Now by doing this, you're basically putting all of your eggs in one basket, in one prop firm challenge. Now what you have to do is divide this, right? Divide this $500 into maybe 5 times $100, which will get you 520Ks, 515Ks, sometimes even 525Ks. Depends on which prop firm and which discount code you can have, right? But the reason that we're doing this is that you have now 5 chances to pass a prop firm challenge instead of 1. And yes, the capital is maybe 1/10 or 1/5 or 1/4 that you could have had with 100k account, but your chances are incredibly much higher. Now, risk per trade. Some people use a dynamic risk management system. Some people use a static one. A static one would be 1% all the way. Dynamic would be you change it depending on how much you're in profit or in drawdown. What I like to do with a dynamic one is 2% risk at the start, and I basically keep trading this while I'm in profit. And when I'm in drawdown, I go to 1% and even to 0.5% when I'm at 5 to 6% in drawdown. Now, with a static one is people, they risk 1% all the way. And you will see that they turn it into a dynamic one a little bit down the road when they're 7-8% in drawdown. But it takes such a long period for you to risk 0.5%, risk 1%, and come back out of that drawdown to pass your trading challenge. So what you should do instead is already go from that 1 account to 5 accounts or 4 accounts, and also double your risk. Start risking 2% because now you only need 2 or 3 trades in order for you to pass your challenge. Even if you're in drawdown, with 1 trade you can be out of drawdown right away. And because you have 4 or 5 challenges, the risk is also spread out over these challenges, which makes the probability to lose almost 0, right? So risking too less is definitely a thing, and risking too much obviously is as well. So don't risk 3% or more. I think that's an obvious one, but for some people that still blow that daily limit, for example, very important. Don't risk more than 2%. This is absolutely the maximum that I go, and it's absolutely the maximum that I recommend anyone goes, as it is already on the high side. But if you spread it over the accounts, it's perfectly fine. Now, obviously, use a stop loss. I don't think that I have to mention this, but apparently it's still something that people don't do. Use a stop loss, again, to prevent yourself from these bad days. Maybe sometimes you're handling this well, right? You're entering a trade, you're performing well. Because you did not use a stop loss, it became a win. But this is actually more dangerous than if it would have been a loss, because now it is rewarding bad behavior. And because this now is rewarding bad behavior, the next time once this is going to occur and you should actually close, you're not going to, because you think, okay, last time this worked out, I'm gonna let this one run because it's gonna be hitting my take profit anyway. So use a stop loss on those rainy days when your mental capability is not as strong to handle these losses manually. Your stop loss will do it for you. And I've used a stop loss on every single trade in my whole career, and I definitely think you should too. Now, mistake number 3 is emotional trading, and anything to do with emotions in trading is a difficult situation, right? So you want to avoid it. You want to avoid trading out of emotion. You want to avoid trading out of frustration, having FOMO, revenge trading, being impatient. You want to have a disciplined approach, and you want to have rules in place to make sure you follow those rules and be in that system so that you can also be as disciplined as possible. Because in order for you to be disciplined, you need to have a system in place, because otherwise you don't know what you're following and you have nothing to be disciplined to. That's a huge mistake that people make, is that they don't have a system, they don't have rules in place, and they want to be disciplined. But what are you being disciplined to? There's literally nothing to be disciplined to, so you need to have that system in place first. So set strict trading rules and take enough breaks. This is something that is super underrated, but people often ask me, okay, I had a big losing streak, what should I do? I say it's because you want to get away from that state of mind that you're in right now, because otherwise you're not going to get out of that losing streak anyway. So get away from the charts for 3 to 5 days. Then reanalyze everything. Reanalyze your journal, reanalyze the charts, and come back into it strong. You will see that you're out of your losing streak within a couple of days. Another thing is that you have to be a good loser, right? You have to be good at handling losses, as losses are a part of the game. Nobody is a 100% win rate trader, right? Even a 90% win rate trader loses some trades. So you need to be good at handling losses, as most of us are probably winning 1 out of the 2 trades, maybe a bit more, maybe a bit less. But because the risk to reward is high enough, we're making money. And you have to be able to be a good loser, because again, otherwise that box of Pandora is going to open and you're going to be doing all weird and messed up stuff that shouldn't be there in the first place, like revenge trading or having FOMO and being impatient for your next setup. So control your emotion, control your risk, control your discipline, and follow your systems. Now, as a little bonus for you, the 4th mistake that people make is not journaling their trades. You probably heard this 100 times, and I'm just going to go over very briefly because you have heard it 100 times. Again, I'm going to tell it to you. This is probably the most important thing that you can do, is journaling your trades. Start doing this now if you have not been doing this, and you will see your trading improve. You will see it improve probably 5 to 10x. Maybe that's an exaggeration, but you will definitely see it improve. I promise you that. Journaling your trades is so important. One, for the rainy days when it is not going that well, you can go back to this and analyze, okay, what were I doing wrong? What am I doing wrong right now? What was I doing differently back then? And also to analyze the mistakes that you're making, right? To say, okay, today this trade was a loss because, right? Because I did this and this and I should have done this instead. And also the third thing, you have data to back up your skills. So you know what you can expect on average for the next month and the month after that and the month after that. I want to ask you, comment your worst mistake that you have made in your trading career, or maybe that you're making right now, and something that have caused you to lose your Pro Firm challenge. I'm really curious to hear your thoughts about that. For me, revenge trading has been a big killer for Pro Firm challenges in the past. I killed this habit with 1 trade a day, but I'm curious to hear yours. Please leave a like and subscribe if you're new, and I hope to see you in the next one. Bye bye, guys.